Australia's unemployment rate today came in at 3.5%, down from 3.7% last month. That was lower than expected. Now, under normal circumstances, strength in the jobs market would put further pressure on the Reserve Bank to keep raising interest rates. But no, the money markets continue to price in no rate rise at the RBA's next meeting in April because of the turmoil in global banking markets. And the employment data also appears to not only be a strengthening in new jobs, 68,000 new positions, most of them full-time in February, but rather an aberration in January when many people were getting ready to start those new jobs, or casuals who'd simply taken most of January off. But the data, no doubt, makes the job of the Reserve Bank even harder, trying to crush inflation with higher interest rates without tipping the economy over the edge. Well, on that, joining me now, Mousina, the senior economist with AMP. Deanna, first up, the chances of a rate rise from the Reserve Bank in April said to be zero. Is that true or not?
I don't think it's zero. I think the market is overreacting to what's happening globally and the risk of a financial contagion, which is quite elevated at the moment. But today's job figures probably actually increase the risk of an
Well, they really do.
rise.
It's strong out there. You know, obviously employers are employing. The second thing was population numbers came out today. Population is rising rapidly, but those people are finding jobs.
Well, it's mainly been that big rise in migration again. And I guess that those people are coming back because maybe they have a job that they've already lined up here in Australia. So whichever way you look at it, the jobs market is in a very solid shape at the moment. However, there are little signs of cracks emerging, I think, that we'll start to see slower jobs growth ahead.
So what are the cracks? What do you reckon?
Well, the participation rate is off its highs. The unemployment rate has clearly reached a bottom. The forward-looking indicators of jobs growth, so things like the NAB business survey and also some of the Indeed job vacancies, they're all pointing down.
We can see that participation rate there, 66.6%. And what you pointed out was when the participation rate goes high, the unemployment rate's gone low. In other words, it means that everybody who's out there wanting to get a job is broadly getting one right now.
Well, for now, but the pace of jobs growth is likely to slow. It doesn't mean that the unemployment rate will go up in a straight line, but I think that the best boom times for the labour market are over, which you would expect given that we've had 350 basis points worth of rate rise.
Well, that's right, 10 interest rate rises in a row. So then looking out into the future, there's this issue of if you don't crush the inflation now, the inflation stays around. The Reserve Bank governor's talked about this. So surely there's still an argument that there should be more rate rises.
It depends how you're looking at inflation. What are the parts of the inflation story that we're worried about? Do we have a wages problem in Australia? I think the answer is no. The December quarter wages data actually disappointed quite significantly to the downside. The Reserve Bank was looking for quarterly growth of 1%. It came out at 0.8%. All of the indicators around wages growth have not been a problem in Australia. We don't have the same issue that the US has because we had that huge increase in the supply because the participation rate was so high here, whereas in the US, the participation rate there is not even back at its pre-COVID levels. So the parts of the inflation that I'm probably most worried about is around the rental market. Some sides of the services economy still showing high inflation rates, but goods price inflation is likely to slow.
Energy prices are an important one because we saw that ruling yesterday. And again, today, AMO saying there's gas shortages coming into the winter as well.
Energy prices will add to inflation. On my estimates, they will add about 0.5 percentage points to the quarterly inflation data or to annual inflation as well. But I think that we'll have enough of those disinflation areas coming through to offset some of these potential rises at the same time where you don't have a wages outbreak.
So just thinking about this, though, until the Credit Suisse situation turned up, and you could say the Silicon Valley Bank as well, you'd imagine that the Reserve Bank was on a course to take the cash rate to 4% plus. Couple more interest rate rises, perhaps. Put it that way.
I think in February, that was what it seemed like it was going to be, but in March they definitely changed their tune based on the weakness in the data. Because
but more rate rises, they said they still hadn't beaten this
They
sort
probably
of thing.
had another one or two to go.
Now that the Credit Suisse situation has occurred, it's kind of like, well, we don't dare do it because we might actually be raising interest rates when something bad's down the track. It's a bit of a timing issue for them, isn't it?
I mean, clearly they can afford to wait, and we've been saying this for a while. There's no need to continue pounding rates higher because we've already had 10 rate rises in a row, as you said. We can probably give 1 month a pause and see what happens in another month's time. We do get the retail sales data next week, though, for February, which I think is really quite key because we need to see the gauge of the consumer. We do get some weekly data from the banks around spending. I mean, clearly spending is tapering off, but it's not collapsing either.
Yeah, because the keys that he mentioned were business conditions. We've seen that now. We've now seen the employment numbers. Retail sales will be another one that he talked about. So these are key, aren't they, right now?
And also the monthly consumer price index. And I know it's a new series. We might not be able to look into it too much because it has a lot of volatility coming through every month, but it's still a guide as to how fast inflation is either falling or maybe it's not falling enough.
I'll tell you what, Mousina from AMP, always good to chat to you. Many thanks for coming in
Thanks so much.
today and explaining it for us.